All right, so hey everyone, welcome to the first edition of the ThoughtfulLeigh Podcast, which I thought would be really cool to do. Like, I always wanted to do like a Friday podcast, like recapping business news, and I've always in the past have found it to be like very cool. I always look forward to my Friday podcast, it's just like people talking about like what happened in the markets that week, or just like what they're feeling is going on in the economy. And I wanted to dive deeper into like something that like I feel I always enjoyed, and it's kind of like a passion of mine talking about, but people don't really talk about a lot, is like corporate earnings, or just like in general other business news that happened that week. Again, corporate earnings, only in terms of seasons, there's only 4 times of the year where companies will come out and all like announce their earnings at once. So it is kind of like limited, but I want to try my own podcast just to talk about different things going on in the economy. So welcome to ThoughtfulLeigh. Kind of just to break the iceberg, I wanted to start off each week by just kind of a recapping of like some cultural stuff going on, because we all get it, like business, yeah, you kind of need something to like soften yourself up to start talking about more serious things. What I'm listening to this week is Amsterdam Music Week, or as they call it, Amsterdam Dance Event. So if you're really interested in that, check out the Tomorrowland website. They're having an expo and they're having all the DJs come by and step through. I'm sure you'll find some of your favorite artists' poster sets or SoundCloud. Someone might post something. Also Slam FM on YouTube. They also have, because I think Slam is a Netherlands-based radio station, I'm not sure, but I saw some posts about the artists coming in and doing sets there, so that might be another way to find some stuff. Moving on from ADE, Tomorrowland Brazil. The live sets are officially up on the Tomorrowland website and app, and then also the fall weather. So I don't know what it is, but I just feel like fall season and indie music just really collide together in a beautiful way. So that's kind of the stuff I'm listening to this week. In terms of watching, there's this K-drama that I'm addicted to, Typhoon Family. 2 new episodes come out Saturday and Sunday of this week. In terms of sports, the Capital's playing tonight, so I'll be watching that. That's my Friday plans. Real Betis, they drew in their Europa League game yesterday. El Clásico is this weekend, so Real Betis and Barcelona playing Sunday, and Real Betis and Atletico de Madrid are playing on Monday, so that'll be cool games to watch as well. Alright, so now that we kind of got the chit-chatty stuff out of the way, we can get down to business, which is what we're here for today. Luxury earnings. This is post-productionally. I should have said this while I was doing the podcast, but I forgot, which I shouldn't have. I know badly, but I want to, of course, state I'm not a legally licensed financial professional. This is not legal advice or a recommendation, but rather a discussion for informational and educational purposes. Now, post-productionally is sending you back to the podcast. Hope you enjoy the rest of the podcast. Bye. And a recap. So today we'll be covering Brunello Cucinelli, Hermes, LVMH, which of course is the conglomerate of Louis Vuitton, Dior, Celine, all the stuff basically. And then Kering, which is the other conglomerate mainly of Gucci, Saint Laurent, Balenciaga, and other ones. So these are like some heavy hitters. These are the heavy hitters in the luxury fashion industry. So I'm really curious to see kind of like how they reported their Q3 earnings. So first we're starting off with Brunello Cucinelli. Brunello, I have to say, if you're ever interested in hearing or reading a report that goes more in depth of like just the company, but kind of also talk about like what their vision is. I mean, all companies do this in terms of corporate vision, but Brunello Cucinelli, they do a really good job in terms of like just talking about in creative terms what they feel as like their company's like mission to society. Like Brunello writes letters to the young people, the youth, kind of talking about like their role and how they can be like citizens of the world. Like it's really interesting to see kind of how like each company kind of has their own vibe of how they want to present themselves and talk to customers or clients. And Brunello, I think, was a really cool way because it got very philosophical in some sense. All right, so in terms of revenue, here Brunello only has 3 regions that they are reporting on. So that's going to be Americas, Asia, and Europe. As you can see, it does look like Europe for the first 9 months of 2025, which is on the right hand side. Europe was in terms of percentage of revenue, Europe had the biggest percentage of revenue, followed by Americas, and then after that was Asia. In terms of when they go into the regional highlights, they talk about for Europe, it was a strong, solid local performance, and then also high-end tourism that contributed to a 10.8% increase from quarter 2 results. For Americas, it was strong results direct in their retail division. So they consider retail to be their directly owned and operated stores, but then also the luxury department stores. So they found strong performance in the retail division for both the directly operated stores and the department stores. In-season sales outpaced last year in both the retail and their wholesale channel. And then this was interesting. So they did a price adjustment, aka price increase, for fall/winter 2025 collection, and they found to account for the tariffs, and they found that this did not impact the demand. So this is very interesting to see because, as we all know, price increases has been something in the luxury world since 2020. I do feel like Brunello's customer base would be someone who is less impacted to price increases per se to like an LVMH customer, but I am curious to see at what point they find themselves limited by this. It's also interesting that they did this so soon in terms of the tariffs, and so I do kind of want to see like in the full year results kind of how the other brands account for the tariffs as well. In Asia, there was double-digit growth in China, which also represented about 13% of the sales. In Middle East, contributed positively, and as they added an Abu Dhabi store in Q3, and then South Korea remained solid, and Japan did contribute to regional growth in the area. So as I mentioned just a bit ago, in terms of channels, they have a wholesale channel and a retail channel, which is their department stores and their own operated stores. In the first 9 months of 24, revenue within the retail channel was 63.4% of the revenue, and wholesale revenue was about 36.6%. In terms of highlights per each channel, and within the retail division, retail channel, I'll mainly talk about that. Revenue grew across all regions for the first 9 months of 2025 and for Q3, and in the spring/summer 2025 collection, it did sell out. In terms of management outlook for 2025, their fall/winter 25 collection took off with an excellent start, they said. They're confident reaching their targets that were set for 2025. So this targets are, as a recap, where the company kind of in the beginning of the year and also at prior quarters will kind of like say, based off of what we were seeing in the marketplace, we're kind of placing these expectations that this is what's going to happen for this year or for the upcoming quarter. And so kind of typically if they're saying that they're maintaining expectations, that could be a good thing in terms of like if they set lofty targets before, they're kind of saying like, we're doing really well right now. We're going to expect to see that we're going to continue to grow, versus like kind of if they set maybe more conservative expectations at the beginning of the year and we're saying like, oh, the market is still kind of challenging, we're going to like maintain those expectations, or then it's like, okay, fine, like you guided towards this, so we're not going to like, as an investor or like as someone, because first I say like I'm not advocating to invest in these companies. I'm just saying like someone listening to these calls is to say like, okay, what they're seeing in the marketplace and like what they're seeing in the performance right now, it's saying that like I know not to expect growth from them. And then more pessimistically, if they're saying like they already set like, we're not really confident in like our performance this year, but then they go on to the lower expectations of saying like they're guiding towards we're going to have less revenue, then you definitely know that like company performance that year isn't as great as it could be. So that was kind of a tangent, but kind of moving on from there. So Brunello is saying, because we're seeing such good results, we're confident to maintain the expectations that we set previously. And then lastly, they had excellent order intake for the spring/summer 26 collections. And then due to the feedback they received, they're confident that they will be achieving revenue growth of around 10% for 26 with healthy and balanced profits. So again, this is saying like they're doing forward guidance here for 26, saying that like based off of what we expect, based off of the feedback that we've received from our 26 spring summer collection, we're thinking that we're going to do good next year. So for like when they announce their full year results, it will be interesting to see if they maintain this guidance of saying that like we feel confident about this, or if they change their number at 10%, like will it be higher, will it be lower? Like that's something that will be interesting to look at and the further reports. So that's kind of the Brunello results that I wanted to go over. And then moving on from there, we're going to talk about Hermes. So Hermes' regions are Asia, which is excluding Japan. In terms of revenue percentage change for the first 9 months of 25, the area grew by 4%. For Japan, it grew by 15%. Americas grew by 13%. Europe, excluding France, was 12%, grew 12%, and then France itself grew 9%, and then the other area grew 15%. In terms of general highlights, revenue was up 10% at constant exchange rates, which was a slightly better performance than last year. For the quarter, considering the first 9 months of 2025, revenue was up 9% at constant exchange rates. They, in terms of guidance, also confirming revenue growth goals at constant exchange rates that were previously set. So they are saying constant exchange rates because it is interesting to see if some of these presentations, and they talked about it. Japan last year, I guess, the value of the yen really contributed to growth in the region for them, and LVMH and I believe Kering also kind of talk about this, saying how they had really strong numbers in Japan last year. But just to say in general, currency can impact the numbers for these companies. And then they did also say, and speaking of currency, that currency in general the exchange rates did negatively impact their revenue. Based off of regional updates, Asia, excluding Japan, they benefited from loyalty of local customers. So local customers, it is interesting also, I guess when you're reading these reports of companies talking about local customers versus tourism, I think we all know when you see the like fashion videos of like, oh, I got my Hermes Birkin in France, and people kind of saying sometimes like you save money on, like especially if you're coming from the US, you save money on buying the bag in euros versus in USD. So I guess from that instance, it makes sense for why companies would talk about tourism. But here they're also saying like it's not just tourism that's contributing to the performance in that region. Like they're saying here, local performance is also good. So that's just people who live in Asia, not Japan, and are going out to the store and buying. In Japan, they sustained growth driven again by local customers. In the Americas, there was a slight acceleration in the third quarter, driven by the US. And in Europe, excluding France, solid growth in all countries, and in France, sustained growth in all stores. They're saying the other region mainly consists of the Middle East, and that's the same momentum. In terms of sectors, leather goods and saddlery, the percentage change from the first 9 months of last year, so this first 9 months of 2025, was up 13%. Ready-to-wear and accessories was up 6%. Silk and textiles was up 4%. Perfume and beauty was down 5%. Watches was down 3%, and other was up 11%. So the leather goods and saddlery, they talked about their in line with expectations for the year. So like they're again saying, kind of what we said for the expectations at the beginning of the year, we're in line with what we were expecting. Strong demand for iconic products and new collections, and they introduced a 24 leather goods workshop, so this is increasing their capabilities of production. And over the next 3 years, they plan on introducing 3 more leather good workshops. For ready-to-wear and accessories, they had an acceleration in Q3. the men's spring and summer 26 runway show was very well received, they mentioned. For perfume beauty, interesting is saying that they were down 5%, but they were impacted by them having really strong performance last year when they introduced the Burania perfume. And so that's kind of why they were down this year versus last year. But then they also introduced 2 new intensities, or intenses for this year. For watches, they released a new version of the Hermes H08 line, and they are reinterpreting one of their complications that will be put into 2 watch lines. And they're planning to strengthen its production capabilities with a watchmaking site that they're hoping to introduce by 2028. For the other division, so this is going to be like their jewelry, which I really like Hermes' jewelry, by the way, and their home collection. They continue to deliver strong growth. They presented a new collection for, again, I cannot pronounce this, Haute Bijouterie collection, and they laid the first stone for a new workshop that will be dedicated towards tableware. Hermes' mugs also incredibly really nice. Yeah, so that's just like a random thing, but that's also really nice. Also talking about company like values, as you'll say, you can see Hermes, they really like to talk about like savoir-faire. I don't know how to pronounce it, but they kind of, again, are talking about here how one of the new sites that they're introducing, like, it's going to hire 260 local artisans. Like, you can kind of tell when you're reading these documents, like, what the companies like are interested in highlighting. So that's just something that was off the tangent. But for Hermes, you can really tell it's their savoir-faire, or I don't really know how to pronounce it. I'm sorry. All right, moving on to LVMH. I'm in love with this picture. Like, this skirt is really cute, and the Lady Dior will always be one of those bags that I know is not a good investment because apparently the resale value is really bad, but it's just really one of my forever bags that I really want one day. So again, right off the bat, LVMH is talking about improved trends in Q3 driven by solid local demand. So they're saying locals, they showed up. So going to the regions. So of the revenue for the first 9 months of 2025, the United States represented 25% of that. It looks like last year, the United States was also 25% of that. So the performance is relatively the same in that regards. For France, it was 8%. It also looked like it was the same performance. For Europe, excluding France, the first 9 months of 2025 revenue was 18% of total revenue. And it looks like last year that was 17%. So it's a bit above performance. For Asia, it was 27% versus last year it's 29%, which is lower than last year. Japan was 8%. Last year was 9%, so it was a bit lower. And then the other markets is 14% versus last year is 12%, so that was a bit higher than last year. In terms of business group performance, so LVMH, again, since they are a conglomerate, the wine and spirits division was down for the first 9 months of 2025, is down 4%. For fashion leather goods, is down 6% for the first 9 months of 2025. Perfumes and cosmetics is flat. Watches and jewelry is up 1%. And selective retailing, so that's Sephora and a few other stores, that's up 3%. In terms of some general highlights before we go into the meat of how the business groups performed. So they described that local demand to be solid across all geographic regions, specifically, I think Europe and the US was highlighted. Japan, for the first 9 months of 2025, they are describing to be lower than last year's first 9 months, and that was because the yen is stronger in value this year. it seems like from reading their first half results and also this, that last year I think performance was really strong in the Japanese market. But since the currency got a bit, also kind of due to travel, but then since the currency got a bit stronger, that performance kind of went down some. And then revenue within the Europe market experienced tourist spending declines that were affected by currency fluctuations. So again, this is currency impacting the business, but this time where people maybe weren't traveling as much because of currency impacts. They are describing the macroeconomic environment to be uncertain at the moment. For fashion and leather goods, they described local demand to be resilient. However, tourist spending was affected, again, because of currency fluctuations. And for the watches and jewelry business, the group experienced success with their iconic lines. This Tiffany's, but then that's also going to be like some of the other brands that we'll get into. And again, as I mentioned, for selective servicing, that is Sephora and DFS. Moving into fashion leather goods, I'm skipping over wine and spirits I'm not as familiar with. All right, fashion leather goods. Organic revenue declined in the first 9 months of 2025. For Louis Vuitton, they saw a successful launch of new products. For Dior, there was the new Diorgami high jewelry collection. And I have to say, I'm really in love with this collection. And it looks so beautiful in terms of the earrings here. But then also the necklace is really beautiful. And you can see it's kind of flowers up close. But then it's kind of, they also looks like gears. But I have to say, this collection is really pretty. Again, it's high jewelry, so it's going to be whoever can afford it. Very fortunate, but it's really pretty. Going back to the presentation though. So Loro Piana, they had momentum that they described to be excellent for all product categories. They partnered with Team Europe for the 2025 Ryder Cup, and the new Loro Highlands capsule collection was launched. And when I do look at this collection, I do get very much like the equestrian vibes, which is what they were going after. So that's kind of fashion leather goods. They also talked about the first one ratios for a few of their new creative directors within their other brands, and then also in terms of new product collections as well. Perfume and cosmetics I'm also kind of going over. I don't really know perfume industry that well. Like I know their brands, but not much into it. So watches and jewelry, another love of mine. Organic revenue actually increased for the first 9 months of 25 compared to last year. For Tiffany, they continue outperformance of their iconic line. So this is going to be like the knot, the T, and some of the other ones. Ongoing successful renovation of their stores. They experienced strong traffic and sales and their new Milan and Tokyo flagship stores. Again, talking about high jewelry, they experienced record sales for their Blue Book 2025 Sea of Wonder. And this is actually pretty interesting. Designs, again, I feel like with high jewelry, the brands get to be so creative in how they want to design stuff. So, I can't actually find the book, but this is the jewelry collection, the yellow diamond here. And I actually believe that may have been the bird on a rock collection that I showed, and not the actual. Yeah, so I just showed, and so they also launched the Bird of the Rock collection, which they're seeing a promising start of, and I believe I just showed the collection for that instead of the Sea of Wonder book. Let's see, can I get the Sea of Wonder book up? Okay, so this is the Sea of Wonder book here. Look how cool this is. Like, the yellow diamonds here are so cool. But yeah, high jewelry is so creative. Okay, so that is Tiffany's. In terms of Bulgari, they had excellent performance of the Serpentine line. The Serpentine line is one of my favorite collections of jewelry. The Tubo Gas collection is steadily expanding, and they had success with the polychroma high jewelry and watch line. For Hublot, they launched the new classic fusion chronograph for the UEFA Champions League titanium watch. I don't know why. Like, if I were to ever think of a watch for the Champions League, this does really scream it. DNF is celebrating 160 years, which is actually a very long time. I know there might be companies that's older, but I mean, that's a long time to be operating. And then, I'm going to pronounce this wrong. Shamu, or Shamet, is new jewels by High Jewelry collection. They are also continuing the development of the B line, which is a really pretty line. I know some people have mentioned this line for like if you wanted a gold bangle but didn't necessarily want the love bangle, or like one of the Tiffany watches bands, or even the Van Cleef bands to get the B collection bracelet. But so this is their Jewels by Nature High Jewelry, and again, look how stunning these are. I'm in love with anything pink here. So, okay. So that's LVMH's watches and jewelry. And actually, I think we're going to move on to Kering, going on from there. But selective retailing, again, Sephora, and then their other stores. Okay, my camera battery is about to die. I feel like that's something YouTubers all say, so I now got to say it too. We're moving on to Kering. In terms of their... Okay, in terms of group revenue by segment, so these are all their different brands. This is reported revenue for Q3 25 compared to Q3 24. So Gucci was down 18% from Q3 24. Saint Laurent was down 7%. Bottega Veneta was down 1%. Their other houses, so Balenciaga, I forget some of the other ones that are grouped here, were down 5%. Kering Eyewear is up 2%. And actually in their half-year results, they do talk about how strong eyewear has been for them in the first half of the year. So that is something that's interesting to see. In terms of revenue breakdown by region, as a percentage of the Q3 25 revenue, Western Europe was number one, and which is up a percentage point year over year. North America was third at 24%, which is up 2% from last year. Asia was second in terms of the biggest portion of the revenue. It's down 2 points from last year. Japan is at 8%, it's down 1% from last year. And then the rest of the world is at 8%, which is unchanged from last year. By channels, retail, which includes their e-commerce, is 74%. Wholesale and other is 26% of the Q3 25 revenue. So general highlights, revenue as reported was down 10% for Q3 25. Currency was a significant headwind for them. So Hermes talked about currency, LVMH talked about currency, and now they're also talking about currency as something that they had to compete against for this quarter. And they did see improvement though from prior quarters. So for Gucci, it looks like retail revenue was down 13% on comparable basis, and they are seeing moderation in traffic decline. So for Saint Laurent, retail revenue was down 2% on a comparable basis. Positive performance in their full price stores. So here, Saint Laurent does have a few outlet stores. So I guess they're saying they're having positive performance in the full price stores, but in the outlets, it may be a different story. North America is turning positive for them, and warm reception of new collections and ready to wear and shoes are up as well. For Bottega Veneta, retail comparable revenue was up 5%. Double-digit growth, assuming DD means double-digit. Sustained double-digit growth in North America retail, Western Europe, and Middle East. Growth was up, but not in double digits, I guess. APAC was close to flat, and Japan was down modestly. They're saying here, for Bottega, the local and high-end clients were part of the factors for driving growth. So again, this is saying that here locals were actually part in contributing to growth versus tourism. And so LVMH pointed out, so I'm not sure, maybe people aren't traveling as much because of currency fluctuations, but they're saying rather than traveling, they'll just buy the bag or whatever ready-to-wear item or whatever that they want locally versus abroad. Ready-to-wear and shoes were the fastest growing categories for them. They also said they had a successful launch of the Campagna bag. I think that's how it's pronounced. I just want to pull this bag up. Sorry, adjusting my cookie settings. Remember to adjust your cookie settings. Okay. So, I love Bottega's, like the woven leather look. So, this collection is really nice. I'm a sucker for a brown bag, but also this fuchsia color is also nice. So they're seeing positive outlook in that collection. All right, moving on to other houses. Balenciaga, they're saying, is seeing slight improvement, which was led by performance in North America. And Boucheron have strong performances in both retail and wholesale. This is Kering Eyewear. Again, I don't really know much about eyewear, so I won't go into it. So that was the first edition of the ThoughtfulLeigh Friday podcast, kind of where my whole goal or hope is to kind of go over business news in a chill way and kind of make it more attainable or understandable to people like in their 20s and 30s. I feel like also like I kind of wanted to show that like, so you can be a luxury fashion owner, like lover, like you can be an LVMH lover in terms of like Bottega. No, sorry, that was the wrong brand. You can be like a lover of like Louis Vuitton or Dior, in my case, with the Lay Dior. And I want to know more about like how the company's performing. Like you don't have to be a finance bro to know about like how LVMH is performing in terms of what they're going up against in terms of challenges in the marketplace or like what they find their strengths are. Actually, in fact, I think if someone like really loves Dior or Tiffany's or whatever, like you kind of want to know more about like what they're going up against, and you kind of can like say, you know what, like this is really interesting to know about. Like I don't think this has to be specifically for investors to know about like how their investment is going. I feel like learning more about companies just gives you more transparency about how you want to interact with these companies. So that's kind of the reason why I love reading these reports. But anyways, that's enough of me rambling. Enjoy your weekend or enjoy whatever rest of the day that you're seeing this on. And I'll see you next week for another episode of the ThoughtfulLeigh Podcast. Bye.